Hi everyone, you're welcome. Thank you for being here. Thank you for joining us. So we'll just wait a few more minutes for people to join. Hi guys, hi everyone.
Can they lock us?
Hi Timsy, thank you for joining. So I'll just confirm that. Okay. Hi Brixmount, thank you for joining. IDMJ Believe, thank you for joining. So we'll just wait a few more minutes. I didn't understand that. Hi Alayinka, thank you. Hi Femi Taiwo, thank you for joining. Okay, so one more minute and then we are starting. Hi Tosin Adebusi on. Thank you for joining. Okay, I mean what we're going to be discussing is something that everyone needs to know and be aware of. One more minute and we start. Actually a few more seconds and we are live. Hi Samuel, thank you for joining. Someone says power. Hi. Okay. Hi, Ramat. Hi, Olariwaju. You're welcome. Thank you very much for joining. So we'll be talking about inflation. Actually, it's exactly 10 a.m. and we're starting now. So hi, everybody. My name is Matilda Adefalujo, and we're going to be discussing a lot of things that, people have questions about. Basically, we're talking about inflation, we're going to be talking about interest rates and all the different numbers and stories that we've been seeing. And when the numbers came out, oh, inflation is now down at 16%. Oh, what does this mean for me? Oh, the MPC did not do this, they did that. So I'm going to be inviting on this live today. We have seasoned analysts. I'll tell you that they are really, really seasoned economists that will be helping us to break down all of these issues that you have. Whatever questions, you can just type it in the chat. Any question you want answered with regards to inflation, interest rates. So I have first Praise Ihansekhen, the team lead of Meristem Research, and she's going to be joining us in this conversation. Just report to us, please. Also, we have Felicia Awolope, the lead economist. Very sorry. I was going to say head economist.
Head economist.
Thank you, Felicia, for joining us today. So, just to start the conversation, so inflation is down 16%. We're coming from times where inflation was going into, I think it entered 30% at some point, did it?
Yeah,
exactly. Yeah, exactly. So we're coming down from 31%, now it's 16. And I know that it has actually been falling since the beginning of the year. I think there was only 1 month of increase. And so the question is, inflation is falling, but I don't see any reduction, any actual reduction in the price of things. So what does this reduction in inflation numbers mean for me as a consumer?
So who would you like to take your question first?
Anybody. Anyone.
Okay, so taking it from what inflation actually means, inflation is the pace in the increase of prices of goods and services. So whenever inflation is positive, whenever we have a positive number, excuse me, it means that prices are actually rising. Now, when there's a decline in the rate of, in the pace that prices are rising, that's when we see inflation numbers falling. And yes, it means that prices of goods and services might not actually reduce, but they are not getting as worse or as high as they would have been if the pace of increase are not moderated. And so that is what we're currently seeing in Nigeria. So prices are not rising as fast as they were rising last year when inflation went as high as 4%. And you would agree with me, if you look at one pack of noodles, it went from around 6,000 to 10,000, 11,000. And if prices continue to rise at that pace, maybe we'll be nearing 20,000 now. But because the pace of increase is beginning to slow down, it has slowed down considerably. would see pack of noodles at 9,000, 10,000 ish. And that is the stability that we're beginning to see, and that we're talking about.
You must
Yeah.
eat noodles a lot. Because what you mean, you know, the price when it was 6,000, 9,000,
Exactly,
ten
like how
thousand,
do you
eleven
know
It's
thousand.
a
10,000,
staple. So I'm
6,000?
using noodles because it's a staple food.
I don't know that. So,
Everybody eats noodles.
no, that I don't know that information. So, for you
Yeah.
to know that
Hey,
information,
Prince, what do you know then?
well, I mean, gold.
Okay.
Well,
Okay.
I mean, I think I agree with your your thoughts about the fact that the prices are still high, right? The inflation rate at 16%, it
Yeah.
is still high. That's the truth, right? But you should ideally have a single digit inflation, which years ago it's hard to believe, but there was a period
Yeah.
in Nigeria where inflation was single digit. And in fact, if you do the average inflation for like long run average inflation, say 10 years, you're going to be having between 10 to 12%. So in reality, at 16%, it is very high. Well, what we're just saying is that there's been some improvements coming from, as high as in the past 2 years, there's been some improvement. Of course, with the fact that the methodology, the way it was being calculated was also changed. So that
Mm.
kind of added to it.
Yeah.
But then there's also the actual market, actual market activity, which if we're all being factored with us. This time last year, bag of rice was, I know bag of rice.
Explain. What about
Bag
it?
of rice was over 100,000, but now you can get 60,
Yes.
kind of thousand. So that there's still an increase in the price of goods and services,
Yeah.
yes, but the pace at which it is increasing is
Mm-hmm.
less compared to before.
Yes.
So basically, it's not as if, oh, the fact that inflation was 18% before and now it is 16% doesn't mean that price levels are generally down. It's just that
Yeah.
the pace at which the growth is, being recorded is slower.
Yes.
Yeah.
Yes.
Thank God we understand that. So looking at this 16% now, why do you think, or what do you think are the drivers of the lower pace of inflation that was recorded in October?
I mean, Chris touched on it just now and said that there was a change in methodology. The methodology, the basket components, and a lot of things that goes into the actual calculation of what inflation rate is were changed at the beginning of this year with the rebasing exercise, of course,
Yeah.
and that's one factor. But taking it to market realities, like I mentioned, we've seen stability in exchange rates because manufacturers imports, traders imports, and this makes their prices or their costs subject to movements in exchange rates.
Mm-hmm.
And since we've begun to see some sort of stability in exchange rates for the most of this year, it means that there's stability in their costs. And
Yeah.
then that means that the volatility in the prices of their goods and services also slowed down.
Yeah.
And that's a major contributing factor. Another thing would be that fuel prices have stabilized this year. Following the removal of subsidy in 2023, we went from around 100 naira to 170, went to 300, went to 600. Those were volatile times.
Yeah.
And this would also, of course, affect, the prices of goods and services because if I'm selling rice, I have to transport my rice from the market to my store, and I'll be adding that cost, to the price of my own rice that I'm selling to you. And now that we're beginning to see stability, fuel prices are not moving so volatile anymore. And so it's another thing that is contributing to that slowdown in the pace at which the final traders, are increasing the prices of their own goods and services. So let me put it that way.
Do you know that it's
Also,
actually, yeah, sorry, I'm sorry, Praise. Do you
yeah,
know
no,
that
I was just going to add that also typically within this period, you are in the, when the harvest season.
yeah,
This is the
yeah,
season of harvest, for
yeah.
most crops in Nigeria. So typically within the harvest season period, you see prices that, I mean, food price will not be as high as
Mm.
they would used to be in planting season and things like that. So
Yeah, I
um,
mean, just to quickly touch on what Felicia said, it's quite difficult and hard to believe that there was a time that fuel price was 100 naira per liter.
Oh, it was
Like when you
65
mentioned
naira.
it,
It
I
was
thought it was a
65.
mistake.
We see when it went from 65 naira to around 100 naira, there
Yeah,
was there was actions from people
yes,
took to the
and now we
street. We
are,
protest,
protested.
yeah.
We
yeah, I
protested,
remember.
and
It's
now we are buying
very,
it at 800,
very, very.
900.
Mm-hmm. And also, I was trying to buy bananas like 2 days ago, and then just to buttress what you said about harvest season and the impact that it could have on food prices. So I was trying to buy bananas some days ago, and they gave me the bunch, like a very big bunch, and they said, "Oh, it's just 1 kg." I was like, "Oh, are you sure? Like, do you need to call your mom?" So I mean, harvest season, the fact that there is much more supply somewhat
Yeah.
has impact on price levels. Then there is also, just like Felicia had mentioned before, imported food inflation is actually quite lower, compared to
Yes.
what it was. And
Yes.
just like you said, the filter effect, or how it filters into the end price of manufactured products, in Nigeria. But I also need us, so away from the headline inflation, I want us to now pay attention to the core inflation. That's inflation less volatilities like food prices, and also
Energy.
energy prices. So, like, what does that number tell you? It's currently at 18% right now, which is above what headline is saying. So, what does that tell you? And also, I think we should also touch a bit on month. So, despite the fact that headline inflation on a yearly basis is falling, but then there's still some pointer to the fact that inflation levels, or at least the factors that stoke inflation, are still present somewhat. There's insecurity in different food producing regions. So what do you think the pulse of inflation generally is, like, when we actually look at it deeply?
I mean, if you look at the baskets,
Mm-hmm.
if you look at the baskets, if you look at the services that fall within that core basket, you see accommodation, you see healthcare, you see education, you see transportation, and yeah, true. A lot of these their costs are beginning to stabilize, but the fact is that there are other things that are impacting. Take transportation, for instance. The fact that fuel price is not so volatile doesn't mean that the prices of cars themselves, buses, and the prices of spare parts and everything are falling so hard that transportation costs will be very, very low. And so, yes, whilst a portion of their costs are getting more stable, there are still other things that we need to work on, fundamentals. Nigeria's stable imports, and even the exchange rate is stable. What about the global commodity prices? What are they saying? Even if the conversion, it means that there's stability. Yes, 1,000 naira is still 1,000 naira in the actual sense when I want to buy something in the global market. What of if prices in the global market increase themselves?
Yeah.
Yeah, so away from food, away from maybe energy costs, there are some other things. You see healthcare, they have to import a significant, a key input for most healthcare products.
Yeah.
And it means that when prices of these items jump in the global market, even if exchange rate stays constant, it will still affect costs. Yes, so generally in Nigeria, there are still underlying, inflationary pressures. And when you look at month to month, like you mentioned, we're moving into the festive season.
Mm-hmm.
Demand increases because people are buying to celebrate Christmas, to celebrate end of the year. People know that IJGPs are going to be coming back, you're stocking your stores and all that.
Yeah.
And that means demand is rising. And when demand rises, prices rises because except production is able to match up that level,
Yeah.
of increase in demand.
Yeah, I think this also reinforces the fact that the world is basically a global village. To be honest, right? When you have all the things, you think about all the trade brouhaha that has happened this year alone, it's been enough to even add an increase to price. Because then telling me that, oh, something is happening in the US, and then, oh, because let's say, which country now, let me mention it, just a country that purchases that manufactures cars and purchases something from the US, or software, anything, and
Just
then all of a sudden you have to pay more for that. And of course, I'm going to increase the cost of that. And then there's also the cost of transportation, there's the cost of shipping, and all those that have also increased. So that the fact that the world is just one, to be honest, that's why you now see that when there's inflation in some other countries, it has its own impact on being imported into Nigeria also. And of course, it's time to party. This is December, so
tell
definitely inflation should be going up
exactly.
with that increased demand. Yeah, that increased demand, especially for food items, alcoholic beverages, non-alcoholic beverages, and things like that. There will be definitely increased
Recreational
demand,
activities.
recreational activities, and all those things. Those are things that are outside the food and energy basket of inflation. So they are within the other basket of inflation. And the reason why food and energy is more or less removed, just like Matilda said, they are volatile, right? So because of the volatility, you tend to want to gauge them separately. So that's why here they are gauged separately, and then the core basket, there's also the every other thing apart from those two things that are volatile is now together in one basket, which we call the core basket. So, and then all every other thing we've now mentioned to say these are the things that affect them then impact the movement of that core basket.
Something that is interesting is there's honestly, I know that the monetary authorities, they've been trying, to be honest, like they've been on top of their game, trying to ensure, oh, let's cut at the time that we're supposed to cut, let's hold, let's do this, let's do that. But something that I like to say is there really is only so much that monetary authority or the monetary policy, any tool of the monetary authorities can do. And let's just speak a little bit to what fiscal measures do you think need to be put in place to ensure that that actual pass through of the different measures, the different actions by the monetary authorities are like they're actually able to filter into the price levels of goods and services before we actually start to talk about the monetary policy.
I mean, you mentioned earlier on in this conversation that there's insecurity to
Yeah.
food producing in the regions, right? And it means that these are the regions that are known for producing the largest portion of
Mm-hmm.
food that is generally consumed in Nigeria. And when these regions are experiencing insecurity, it means some farmers there cannot go to the farm. And it even means that the farmers that can go to the farm might not be getting full yield because there may be destruction of some of their crops. Days that they can't go to farm because of this insecurity, their crops get wasted. Another thing is that, like you mentioned, one reason why we see increased supply of food items during harvest would be that for some of these perishable goods, if I don't sell it when I've just harvested it, we don't have enough storage system so that I can preserve it for as long as I wish to be able to sell it. And so there's the need for me to sell it now before it spoils and I don't make anything on it. And so we don't have enough storage system. There is poor infrastructure generally. For the manufacturers, they have to add the cost of fueling their generators to the cost of their goods and services because electricity has not gotten to that point where it's fully stable yet. And then even for some of their, machines, we have to import them.
Mm-hmm.
So some of these underlying are fundamental issues: inadequate storage system, insecurity in food producing areas, poor infrastructure, bad road networks, even insecurity in transporting your goods and services from where you make them to where they'll be sold. Those are things that are adding rather to the costs of these goods and services by the time they get to their final consumers.
So what should they do? What can we do?
Fix insecurity in these areas where we produce food. I
Mm.
mean, if farmers can go to, first off, another thing I would like to mention, Nigeria's agricultural system consists mostly of small-time farmers, a lot of small-time farmers that don't have access to mechanized systems that
Mm-hmm.
will help increase their output significantly. So while those small-time farmers trying to make trying to make end meet
Yeah.
producing so that I can eat and sell the rest. And now there's insecurity. I don't even have enough, money, enough capacity to say I'm going to secure my farm and everything. I am depending on the government. So the fiscal authority can help maybe by fixing that, giving support to these small time farmers so that they can become farmers with larger capacity,
Mm.
fixed infrastructure like I mentioned, electricity, road networks, a lot of these things, to be very honest.
And I just think that for any economy to work, it's the function of the fiscal policy, the government. If you look at Nigeria, there used to be a report that used to be released before. I think that report has been stopped. But it's an index called Ease of Doing Business,
Yeah.
right? Ease of doing business in Nigeria is significantly difficult. So number one, you need to fix access to capital, right? Funding for businesses, whether in the agricultural sector, in the manufacturing sector, in the energy sector. Personally, I believe there's gold in mining that we've not even scratched the surface about in Nigeria. There's so many, hidden sectors that if the issues in those sectors, that if access to capital in those sectors are fixed, two, ease of doing business for those sectors also, it's more relaxed. You can rely on good road networks. You can rely on electricity. You can rely on water. You can rely on, you can just rely on security, things that are provided by, that should be provided by the government, things like public goods that should be provided by the federal government. If you can rely on those things, it'll be easier to plan, it'll be easier to increase your capacity, and definitely also be easier to produce. It'll be easier to know that I produce this, I will be able to sell it at this rate. So those are the things that the federal government definitely there's been some progress, but like you said, there's a lot more progress from the monetary policy side than from the fiscal policy. But then we also need to bear in mind that monetary policy action, that's the CBN and the likes, their actions are mostly short-term focused, while the fiscal policy, the government, their actions are long-term focused. So but then I also believe that long term is a string of many short term activities, right? So you Matilda. So you need to have all those many short-term activities that will then accumulate into the long term, which is what we've seen the monetary policy do, but the fiscal policy also needs to do more. There's also, of course, the fact that well, we're not talking about fiscal policy reforms here, but there is also the one good thing I think I can say, as much as it is termed controversial right now, the truth is the tax reforms that is coming next year has eliminated some multiple taxes in different places for some businesses. So it makes it easier for you to expect higher profitability if multiple taxes are eliminated. A lot of people are exempted from the tax bracket, right? Of course, you need to then get your books correctly, get your records correctly. So hopefully these funds will then be utilized into making the economy better, productive uses, investing in capital projects, actual infrastructure projects that can make the life, the ease of doing business in Nigeria better. So that ease of doing business and access to capital, I think those two things can unlock significant goals in the Nigerian economy.
Right. A lot of people say that it is the function of the government to actually create an enabling environment for businesses to thrive
Definitely.
in Nigeria. And aside that, it is very important to note that, just like I said, monetary policy is short term. I like to say it's like the CPR that you apply on the maybe any alien
Emergency
economy, as you said,
patients.
exactly, like CPR, first aid, like, okay, now that I've done it, now let us bring in fiscal measures to
Definitely.
ensure that everything goes together.
Yeah.
So now about the monetary policy, were you shocked at the
Well,
last
I
meeting?
shocked with the last decision.
Yes, the last decision, were you shocked?
I don't think anybody in the market was expecting the monetary policy committee to. So just to clarify, right? The what we are trying to say, whether we're shocked about, is, so there's the monetary policy rate. I think everybody in the market expected the monetary policy rate, which is more or less the base of interest rate in the entire economy for a lot of things. It's like
Yes.
a pointer,
Yes.
it's like a benchmark, a pointer to like direction of other rates. I think that a lot of I think 90% of market participants and research analysts, economists, investors, pension houses, a lot of analysis expected the monetary policy to implement a cut to reduce the monetary policy rates compared to what it used to be. But then this time around they decided to leave it the way it was at
Yes.
27%, leave it there, and then
Some adjustments.
make some
Yes.
adjustments to some other things. So
Yes.
I would say it was, after the initial reverberating, the dive down was like, oh, okay, it's actually not that bad. But initially, everybody's like, say what?
And there are reasons why we expected that they would be able to cut, right?
Yeah.
Because, like you mentioned, inflation has been trending lower, and it would make you think that if your major objective is to control inflation rather, and it looks like inflation is trending lower, and of course there's the exchange rate management part, and exchange rate has been stable. So that was, the basis for the expectation by a lot of, operators in the capital markets that we're
Report.
expecting a rate cut. And of course, I wouldn't say we were shocked, but it was not what we expected.
But do you think that, in hindsight now, do you think that maybe what they're trying to do, or what they tried to do, is to ensure that a lot of the gains, or that we've recorded so far, that we don't now shoot ourselves in the leg, and we don't start to celebrate early right? Given that yes, inflation has been falling, but then how sustainable do we even think this is? So maybe they tried to say, oh, let us continue to watch and see how it goes. Do you think that?
I mean, starting from what you and Chris mentioned, that monetary policy actions are short-term fixes, right? So there's a need for sustainability. If something is short-term, as much as you implement it, the fact remains that the impact could wear off before long. And so there's a need to preserve the impact of some of these actions that the Monetary Authority have taken over the past couple of months. I mean, since February last year, they hiked rates, trying to control liquidity so that inflation doesn't increase so much, right? And so there's a need to make sure that the impact of all these things that they've done lasts longer, because if it is not sustainable, there's the risk that we go back to worse than we were before. I mean, so I think this action from the Monetary Authority just shows that, oh, we don't want the impact to wear off too soon, so that we don't go back to way worse than we were before. And so we are trying to make sure that investors are still interested in our securities, because like Chris mentioned, the NPR is like the pointer rate to a lot of other rates in the economy, even investment rates. And so if you cut it, what if investors that are bringing in money to invest in securities in our economy would think that, oh, my return is going to decrease, and they become antsy and they are already looking for other places where they would get higher return. So to preserve the impact of the improvements, to preserve it so that at least it's not long term, but it doesn't wear off too quickly and take us back. So I think this decision by the NPC to maintain rates, to not cut rates like we expected, is just showing that we want to make the impacts last longer, to be very honest.
Thank Felicia. So someone in the chat asked what MPR is. MPR is monetary policy rate. So just
Rates.
like it's just that benchmark rate, or that rate that is, how do I just I'll just leave it as what Praise said, like the indicator, that pointer rate,
Yeah,
it
that's
points to, or it's from that rate that every other rate in the economy now fits from, that, oh, it has gone up, oh, let us adjust this upward, oh, this is now down, let us adjust every other thing downward. So now my own dilemma, or the question that I have to ask is, yes, they have held rates, but then we are seeing rates on treasury bills, bonds, commercial papers. There is I feel like they're moving in a different direction.
yeah.
So what readily comes to mind before I even bring it to ask you or throw it open is, oh, maybe what the monetary policy authorities or the committee, what they are trying to look at is, oh, okay, yes, we are trying to achieve price stability, but then let us also consider that there was a time that we had to increase rates so much, and we've attracted so like a number of foreign investors. Now, if we bring it down prematurely, just like you said, there's a chance that the rate on the real rate of return, but I'm trying to say a way to break it down.
The actual, return I'm
Rate
getting after accounting for inflation
accounting
and
for
all other
inflation,
things. Yeah.
exactly. So if like after removing inflation, now this is now lower. My real rate of return, or what I'm getting at the end of the day, is now lower. So I feel like they are also trying to ensure that, oh, let us keep these rates attractive enough to hold investors, or at least keep them interested in Nigerian securities. But what do you think?
Of course, it just buttresses what we've said, that if the monetary authority does not want a situation whereby you adjust it and investors they're investing to make money.
Yeah.
And by the time I calculate what I'm getting, I'm seeing, oh, there's a difference. It's coming lower, because apart from the fact that it's lower now, it also sends a signal that is there the possibility that it's going to get even less than this
Yeah.
in the nearest future. And I'm beginning I'm already trying to look for other options
Yeah.
before we get to that point where it is significantly lower than what I'm even getting now. So yes, I mean I
So
agree with you about that.
to even buttress that, you notice that, like, before last month, or at least before now, rates on bills, bonds, even own, was set to decline.
What's
Right.
Omo? So
Sorry?
exactly. Is it Omo that we used to wash? So
So open market operational bills were actually trending lower. And all of a sudden, well, I'll not say all of a sudden. So after this decision, or just before this decision, you see that rates started to increase like steadily. And or at least the news in the market now is that there's some focus on automobiles right now by both the CBN and also banks, just to ensure that my foreign investors, my source of dollar, my source of FX, it has to I have to maintain it, because yes, just like Felicia said, there's been some level of stability in FX, but then we are now starting to record depreciation. So I think that the rationale is just, oh yes, well yes, I'm trying to achieve this, because at the end of the day, in a roundabout way, it still helps to curb inflation, because
Yeah.
if exchange rate is more stable, I can plan ahead, in terms of, oh, I'm getting this order from this particular distributor or producer, and I'm going to pay at this particular amount, or oh, there is not so much jump or spike
Yeah.
in the rate at which I'm importing from abroad. So in a roundabout way, but then I feel like more importantly, it's also to increase the supply of FX, which filters into our external reserves. Yesterday I was looking at the news that shows that external reserve is now um like it's at a 9-year high level.
Mm.
Like it shows like some level of progress in terms of attracting FX into the market, into the Nigerian economy generally.
So I think we need to account for the fact that, first of all, this decision to keep the monetary policy rates, which is, like we said, one of the tools that the CBN uses to control the economy. Basically, I think that's one of the major descriptions that we can use. It's just a tool that they use to control inflation in the
Yeah.
economy. And we need to think about the fact that these decisions like this are not made in isolation. You don't make them alone. It's also made in consideration with what is happening on the global scene.
Mm,
Because at the end of the day, investors will find the best, most attractive place to invest. If that is not your own economy, it's going to be another economy. So you need to consider what another economy is doing
mm,
in light of what you want to do. So this brings the conversation of what is happening in the US,
mm,
right? So with the every country has their own monetary, a body that controls money. Basically, every country has one, and in the US, the body that controls that is called the Fed. What the Fed has been doing, for a while now, is tilting towards being more accommodative, right? It is in it's the Fed has basically been reducing their own rates.
Yeah.
And then, of course, there's an expectation for the Fed meeting likely to happen this week that is going to lead to another reduction in rates. If
mm,
this is happening on the global scene, and is also happening with some other major economies too, it means that investors are going to be looking for elsewhere, other economies where they can get higher attractive rates with
mm.
stable currency, right?
Yeah.
So that puts Nigeria in a very interesting position to be able to capture that additional inflow
Mm,
from foreign investors that will be looking for attractive places to invest.
yeah.
Also, it's a way to benefit from the fact that the currency is stable, right?
Yeah.
Why go ahead and reduce your own rates when you can attract more, your currency is stable, we can get higher investment rates with you as a foreign investor. Why not come in? And of course, like you said, the benefit trickles to other economic variables. Like
Yeah.
I think almost everybody knows that there's something called reserves in Nigeria these days. Like, oh, reserves is increasing, reserves has decreased, some of us, I mean, some of us probably on even this call are like, what is reserves? But anyways, just so that's like the cash account of the government, yeah,
Let's
foreign
move
exchange cash
further.
account of the government. So we this action to try to maintain and make sure that the foreign investors stay attracted in a state where there is stable currency is definitely a strategy that the monetary policy body has decided to use, to just maintain and make sure that because this also, like you said, it's a roundabout, and I would argue that the exchange rate has been a major focus actually, right? From 2024 up until now, exchange rate has been the major focus. Last 2024, we said that it was a year of seculars, right? You wake up and
Yeah, I
there's a
remember.
new announcement, there's a new announcement here and there. So it was a very tight rein on the exchange rate markets. And I think that tight rein, even though it has been losing a bit now compared
Yeah.
to last year, but it's still very much there. And so when you account for that, and the fact that inflation in Nigeria, there's a very significant portion of Nigeria's inflation that is attributed to depreciation of the currency. When your currency, you wake up today 1,005, you wake up tomorrow 17, you wake up the next day 19. That impact is significant for inflation. So I think almost half of the inflation impact you have is coming from naira, like the naira depreciation. So I think the strategy of tackling that and making sure you have a stable exchange rate now, like you said, feeds back into the achieving better inflation figures. And we likely to see that. We've seen so far the the CBN can argue that that strategy has worked so far, to an extent, and the likelihood of them just cutting that strategy short, something that has, you're recording victory on something,
Yeah, exactly.
you're not likely to all of a sudden just change from there. So I think that's the rationale, in trying to understand where they're coming from with the actions that they've taken. And then, are they likely to continue in that line? Yes. I think they are most likely to continue, but cautiously, like just being, because at the end of the day, you're also battling economic growth, right? You're also fighting against economic growth, as that is happening. The likelihood of, so there's a thin line, and I always say that the every time a monetary body sits down to discuss, they are sitting down there and they are choosing the lesser of evils.
Yeah.
That there is always evil, but they are choosing the lesser of evils. So it's always going to be a balance. Can we don't want to cut too fast, we don't want to increase too fast, we don't want to hold when we should be cutting. So it's always that balance of deciding on what to do.
I like that you talked about, because a lot of people always say, oh, they are trying to copy global economies, or the Nigerian monetary authorities, they are not doing their own thing. They are, because they cut here, or you do not want to cut, but then they have to consider the fact that, oh, what are investors looking at? So if you increase, or if you cut when others are increasing, there is an impact, a negative impact that it could have on you, because, well, what would happen is that investors would tilt towards a more stable economy that has
Yeah,
That has
higher rates,
better
and then you
resources.
are cutting. So you have to also, just like Chris mentioned, it's one world, it's a
yeah,
They're
global economy.
interconnected.
So
yeah,
what is happening in one particular economy, it has an impact, a ripple effect on your own economy.
yes,
So yes, so we're also going to be looking at how these decisions affect me as a 9 to 5er, or as a consumer, or as, what does this mean? All this one, yeah, speaking English. What does this really mean for me? Like, yes, they held rates, they adjusted the corridor. What do I need to know about this? Am I going to be able to access credit from the bank at a much more cheaper level? Is that likely to happen? Does this mean that, oh, my life is going to be better now that inflation is lower? All of these different things that we've discussed. What does it mean? What does this mean?
I mean, starting from inflation, right? There's something we call purchasing power. And that's that I have 10,000 naira. 10,000 naira is 10,000 naira constant. But I want to buy biscuits that is sold for 1,000 naira. Currently, I can purchase 10 other biscuits. But if the price of that biscuit goes up to 1,200 or 1,500, then my purchasing power has reduced, even though I still have 10,000 naira, because I cannot purchase as much as 10 of that biscuit anymore. And so that is how inflation affects the daily individual. Last year, some years ago, let me use noodles because I think it's staple. No, it's staple, to be honest. Noodles was
chicken is staple.
chicken. Chicken is staple for some.
Let's continue with noodles. Let's continue with noodles.
So noodles was 6,000 naira. I was earning 30,000. That means if I collect my salary of 30,000 naira, I can buy 5 cartons of
Yeah.
noodles, right? Now, noodles went from 6,000 to 10,000. Let me use 10,000. My purchasing power has reduced, even though my salary has not reduced, because now I can only afford 3 cartons of noodles. Now, if I'm trying to project based on that pace of increase, my mind will be telling me that in the next year also, I'll be able to afford only 1 or 1.5 pack of noodles because of that rate of inflation, right?
Yeah.
But because of that slowdown, around this time, I'll probably still be able to afford my 3 cartons of noodles. And it means that I'll still be able to afford as much as, I could afford some months ago, which if inflation had continued at the pace that it was, I probably would not be afford. And that means, thank God, I'm not going to go hungry, or my fear that I will not be able to eat is a bit, addressed, because yes, my salary has not increased, but what I can afford is still a bit close to what I used to be able to afford, which if inflation had continued at the pace it was, I would not be able to afford. And
Right.
so that's the part where, inflation, how it affects the individual. Exchange rates, the same thing. It's a global village. I see something that I want to order on Temu, Shein, and all these places. And before, I need to save for 6 months to be
Yeah.
able to. So exchange rate was 300 at the point, and my salary was 30K. Let me still use that. And that means I can afford to order something of, maybe it was $1,
Yeah.
and exchange rate is 300. That means I have like $100 to be able to buy things. And then exchange rate went to 1.5. And
Hmm.
that means I had only $20.
Hmm.
Do you understand? That means I can't buy so much. And then if I keep that kind of projection, if exchange rate that continue to depreciate at that rate, then it means at some point I will even be able to buy something worth of $1. So
Yeah.
that stability in exchange rate also means that my purchasing power is quite stable. It has not improved so much, but at least it's stable and it is not deteriorating. It's not getting as bad as it could have gotten, right? And that's on the part of exchange rates and inflation. Do you want to speak to
Uh,
monetary authority?
First of all, before I even speak to monetary authority, Felicia, you were never any 30,000.
Exactly.
Like,
So the
she
I'm
just
not
started.
let us
Don't
assume.
use, don't assume.
My salary
now.
was 30,000.
So, no,
Mm.
we don't agree. Please, who are you trying to deceive, me or Matilda? But anyways, I mean, just with the analogy that she has given in terms of how inflation and exchange rate impact. Now, the monetary policy part of it is more. I would allocate it more to. In fact, it affects everything. It affects inflation, of course. It comes to your exchange rates, but then it also affects your investments. Right? This I'm speaking now to um if you're in the investing community, which you should be if you're on this call. And if you're not on this call, you know someone that should be on this call, that should be in the investing community. Come on, why are you not investing? So I mean that there are so many investments for tiny amounts. But anyways, let's not go there. That's not the
Somebody
purpose.
that's earning 30K like me can
You are not any
invest.
You are not
30K.
any 30K, bro. You are
You
not
are not
any
any 30K.
30K.
Let's out you on this call. Let the
So
world
that says
know.
maybe NYC allowance.
Do you understand? And except you were maybe NYC allowance years ago. Yeah, even if you're on NYC allowance, but anyways. So let's assume that you are investing, you're an investing community, which everybody should be. Again, I'm going to reiterate that is life. You're an investing community and you were investing. Let me use the example of a money market mutual fund, for instance, right? You're investing in mutual funds, and the mutual fund basically like with a firm like Meristem, and you have 10,000 naira. 10,000 naira is minimum for mutual fund. You invested 10,000 naira in mutual fund. So now the way the mutual fund rate works is that every day it changes based on the investments that are available in the market. So if the rate that you are getting today, because what the fund manager is investing in gives them an average rate of 20%, right? You would also be getting the benefit of that 20%. If tomorrow we go back into the market and we see that rates have changed, and then the monetary policy rate has reduced. Once the monetary policy rate reduced, like I said, is a pointer to all other rates. It impacts the investments that will be, that are available. That also means that the investment rate would also reduce, and that also means your money market fund rate would also reduce. So that's the link from the money. Of course, the same goes for increase in monetary policy rates.
Yeah.
Definitely also helps you to have better investment returns. You of course you can link the monetary policy rates to whatever investment it is that you're investing in the market. Money markets, treasury bills, even in the equities market, right? Even bonds, even so I would say that we as investors, as the investing public, as a consumer of anything in this economy, you should be paying some attention to what's going on with this kind of economic period, because it helps you to plan. So you know that okay, if monetary policy rates is coming down, that also means that I should expect that rate on some instruments or some financial instruments, like what Matilda mentioned, treasury bills, bonds, and stuff, would come down. If they will come down, okay, do I want to then invest in something else Or do I want to, if do I just want to be safe? I don't want anything to touch my money, so I'll stay there in the money market fund or something.
Yeah.
Or do I want to invest in something else that will likely yield me higher returns? Something like equities market, for instance. You want to buy stocks. You want to buy, I mean, there are some stocks that you may conduct to your advisor, read reports. People like us, that's what we do. We write reports for a living. So basically, we are just giving you that information, for like brief information, and this is what we've analyzed. And so those are the kind of that's why you pay attention to those kind of information. Even though you're not in the economics line, you are not working in finance, you're not working in, but at least because you have stake, your investment is your future, your investment is your life, right? Okay, I was about to go Bible, but where your heart is, basically, that's where your money say your heart is. So
Yeah.
basically, you need to pay attention to some of these things also, because they will tell you and guide you on how to basically position yourself for the future.
I see
Yeah.
another part that I also start to it is that this monetary policy rate is also going to affect the rate at which we lending rates in the economy. And as individuals, as corporates, and when I say corporates, companies, both manufacturers, players in all
Yeah.
sectors of the economy. And so if the MPR is adjusted upward, that's telling you that people are paying more to lend.
Yeah.
Does this mean they'll be transferring a portion of this to the price of their goods and services? Does it mean that if I need urgent cash now and I'm thinking of approaching a credit facility, it helps you plan too that now I'll be paying more. This is not the time for me to borrow. Now I'll be paying less. Is it better that I borrow now to do what I want to do? So you should pay attention because of the cost of credit too. So I just wanted to add
Well, when
that.
you look at it in actual fact, yes, it's higher, but relative to what is obtainable from the bank, I think that it's relatively cheaper, but of course, as a company, you have to ensure that you have all the requirements, or you have the fundamentals to back up, the fact that, oh, I want to borrow, and would the public even invest in me? So yes, it's more expensive, but I think that relative to what is obtainable in the bank,
Yes,
that's
so
commercial paper. I'm speaking to commercial paper
yes, yeah.
now,
Yeah.
so it's relatively cheaper.
Did you
Okay,
mention commercial paper before?
No.
so she
Okay,
was
so you
oh,
did
I
not
was
explain,
listening.
Matilda, you didn't explain what commercial paper is. You just jumped into it. Yeah. So do you want to
Absolutely.
explain?
Okay, yeah, so commercial papers are basically, how do I put it now? They are papers, bills that companies, corporate organizations, reputable ones or good ones basically, offer to the public in exchange for money from the public. So basically what I'm saying is, oh, I'm issuing you this um certificates or paper, but I want you to borrow me money, and it's short term, so
Yeah.
it's just to fund short term working capital requirement, or I need to make payments for this, but I need your money for 270 days, or I need your money for 180 something days, and
Yeah.
then you get a particular interest rate. So I
Yeah.
will be paying you a particular interest rate plus your principal at the end of the vesting period. So
Yeah.
that's basically
Yeah.
what commercial papers are. All right. I think that it's now time to bring it down to GDP. I know that I've been talking about manufacturing or the impact that um, does it really have an impact on GDP? But then I know that GDP figures came out recently, and I just wanted to ask Felicia, what stands out to you, with the numbers? A lot of people say things that, oh, the Nigerian economy is not diversified, oh, there's a lot of undue focus on oil, they're focusing on oil, money, oil money is going to dry up, there's going to be this. But do you think that that is what we still have? Like, do you think that is what is still obtainable? Because the numbers show that I think contribution of the non-oil sector was higher this time around, was it?
That's always been higher.
Exactly. So
So
I feel like a lot of people always focus on, oh, we are focusing on, oh, we are not diversified. So I want Felicia to help us
I
just
mean, so
understand that.
if you look at the Nigerian economy, right, speaking to economic activities,
Yeah.
the oil sector has always contributed, I mean, recently, like for between 4 to
4%. Yeah.
5% to total economic activities. But where people come to make that mistake to think the oil is the major economic activity we have in Nigeria is because the oil sector contributes to FX income.
Yeah.
Oh,
When we are speaking to FX receipt as a country, oil exports is a major activity that Nigeria has that is exported, where their products are exported to earn FX income. So if it's for FX income, I would say yes, the oil sector still dominates. But when we speak to actual economic activities, the non-oil sector has constantly contributed over 90% to GDP, which means the economy is well diversified. If you are looking at pillars of the economy, the agri sector has consistently contributed above 20%, sometimes as high as 28%, 29% to economic activities. And so growth in these sectors are quite notable on what growth for the whole economy would be, right? And then you look at trade, another sector that contributes significantly. You look at telecommunications, ICT as a whole. You look at real estate. Since the change in methodology, we've actually discovered that contribution of real estate is also quite significant. So when you look at these sectors of the economy, they are the ones that are the growth engine of the Nigerian economy. Activities are way more concentrated in these sectors. They are the largest employers of laborers and all that. And so Nigerian economy is well diversified. For the last GDP figures, agriculture contributed around 30% to the growth in the economy. And that tells you that imagine if like you mentioned before, the federal government and the fiscal authority is not able to fix some of these issues that we mentioned for the agricultural sector. Do you see how significant
Yes, it
growth
would.
for the whole economy has, the potential to be?
Yeah.
So yes, major growth engines is not just oil sector. In fact, oil sector contributes mostly less than 10%. Agriculture, trade, ICT, real estate, those are sectors that are actual growth engines for the Nigerian economy.
Do you want to add
Yeah.
to that?
I think the real estate stands out to me
Okay.
because now I mean, it used to also contribute like really low, but now it's contributing almost 13%. It's now the third highest contributor to. And then the real estate sector is very buoyant. Of course, you need to be careful because there are so many things happening in places like Lagos and Abuja. You buy land and somebody come and tell you tomorrow that
It's not your
it's not your own and things like that. You need to watch, discuss with approved people, make sure that I mean, we have a team in Meristem that also helps, clients, walk through things like that. So it makes it easier, it makes it better for individuals to position in real estate economy. So the real estate economy is, in fact, right now, there's so many things happening with a lot of people coming back to Nigeria, IJGBs. There's so many things happening. You are hearing a lot, $9,000, for Airbnb. I don't know about that one. But but with the fact that with the dirty December is about to kick in effect, there's so many opportunities. I think for me, the real estate sector is a sector that would really boost, push within the next 5 years, we're going to have so many activities. But then, of course, like I said, there's always need to be cautious because there's so many things that could go wrong. It's also a form of investing. There's so
Yeah.
many things that could go wrong. So you need the help of someone that's experienced, someone that can, exactly follow the best people that know the road. And then I think the next one for me is also telecoms, communications. Communication is the reason why we can have this call.
Yep.
Communication is the reason why we can be on this life, right? So many things, and there's so many witty inventions that would also come in within the next few years. So many inventions, there's AI, there's technology, I don't even know all the things that are happening. At this point, I think I'm old. But anyways, all those things are going to come up and definitely you will continue to still benefit from them. Now, I would say that as someone I want to enjoy the benefit of the economy itself, but I also want to be able to grow my money. Those are the kind of sectors I'll also pay attention to invest
Yeah.
in these markets. I want to invest in those kind of sectors that have long-term, potentials. And then the fact that they have long-term growth potential, and then there are companies within those sectors too that are also going to do well. I think those are the kind of sectors. So I think I try to like marry the economic expectation with also investing decision.
Yeah.
Right? I don't advise investing in isolation. Oh, let's just go and invest. Oh, they said this thing is good. Let's just work there. No.
price is just increasing.
Exactly. I think starting investments from what we can see, what phones, telecoms, food, real estate, starting from things like that to
No banks.
now, but oh, okay. Banks, yes, you do know banks and things like that to places that you might not need to look a bit more, to be
Yeah.
able to make your decision. Yeah.
Yeah, I think we've pretty much covered it. So I think the next one will now be inflation because we've already spoken to inflation. Do you think inflation will continue to go down? And what the next time the monetary policy authorities will be meeting is February next year.
February.
So do you think that there's likely to now be a change in their stance? Let's do that in less than 2 minutes.
Inflation. Well, of course, the inflation is quite tricky. There's so many for next year. For the first 3 months of next year, inflation numbers might really make Nigerians go, "Oh," because
From December.
there's a bit of accounting, yes, mathematics,
Like,
calculations, yeah, that will play out for the first 3 months that might, maybe want to shake. But to be honest, on the fundamental actual basis, the actual activity that is happening, I don't think we're likely to see that spike again, so much, so volatile that everything is now shaking in the economy. Of course, there are always risks to inflation. Anything can happen. Tomorrow, one country can say they want to go and fight. I said at the beginning that the world is a global village, right?
Yeah.
One country can just wake up and say, "Oh, it's time to war," and then that causes everywhere to scatter, or something can just happen, and then all of a sudden, life at exchange rate. So many things can happen. But on a base expectation, if things continue like this, definitely inflation is expected to continue to decline next year.
Yeah.
And then, what was the second question? On
Yes, I was talking about monetary policy
monetary
authorities.
authority.
What
Okay, yeah, what the action is likely to be. I think for they bought themselves some time with holding it this November. So I think from February we can then, of course, they're going to assess all the things that have happened in the economy and try to see, let's know what has happened. But I think for now, if things continue like this again, we should expect them to, cut rate and reduce it, reduce the monetary policy rates by February.
I mean,
Felicia, do you want
to
to
add to my own
also
2
see
cents,
if there are questions in the chat? So you can drop your questions in the have any. So someone, sorry, Felicia, someone says, so this means that things are not so bad. So just man,
Yes.
course, I mean,
yeah.
like Chris has mentioned, up away from the numbers, away from the figures that we are reporting, actual prices in the markets are a bit more stable. And I think we can, based on like we are saying, based expectation, based on what is happening, based on what we expect to happen, barring any unexpected, events, price levels are likely to remain stable. Yes, we might see seasonal factors play out. When we enter the planting season, there is usually shortage of food supply,
Yeah.
which means food prices could go up a little bit. When we enter the Ramadan season, there's usually people trying to buy ahead of festive activities, and so seasonal factors will continue to play out. But overall, on a broad sense, we expect that price levels in the economy will remain stable with just, moments of occasional hike in prices. And when there are seasonal upsides, we see prices even decline.
Yeah, I think that we've had a really good conversation. I don't know if there's anything that we want to still consider. I think we've pretty much covered. Oops. I think we've pretty much covered, what the economy has, because I feel like a lot of questions have come in terms of, oh, inflation is now at so level. What was Mary Sam's take? What do you think? Or why is it at this level? I hope that we've been able to answer your questions. So, in the absence of any more questions, I don't see any more questions in the chat. So we'll just bring this to a close. Thank you very
My
much.
final word is
Mm-hmm.
invest your money.
So
And follow who no road.
Invest your money, follow the
follow
rules.
like
Yes,
invest, and
yes,
also this
yes.
30 December. As you are
Eh,
getting the December, just also remember to
Please,
put small.
setting your investment accounts a
So
bit. Bye
so
bye.
bye everyone. Thank you.
Bye.